Today I'm going to show you the best 3 investing websites for beginners. Some people don't like to watch these videos and how to listen to other YouTubers on like which stocks to buy. So today we're going to look into your own research on how to do it the easiest way possible. So I got 3 different apps. We're going to use Blossom, of course use Yahoo Finance, and my favorite, Simply Wall Street, which is the best one, which we're going to get into second. So first, let's start in the section. First of all, we have to know which stocks we're going to research in the first place. That's where Blossom comes in. This is a very reliable platform where all these safe investors, they are going to show their portfolio for you here. So, for example, if you look at my portfolio, like, oh, I have 70% in Amazon, let's look at the company fundamentals on Simply Wall Street. And then, so this is just the platform here we're going to have on our website, and a lot of things we're going to use is on the mobile app. We have different topics, of course. You can look up different stocks on here, and they'll tell you like which people are starting to invest in it. But I'm going to show you on the mobile app in my screen recording right here. So inside of the mobile app, we have right here, I have my portfolio, which is amazing. It shows you everything. And then if we go to my profile here, we can see all of our followings, and we can go to anybody we want and see exactly what the hell is Jacob. I know exactly what he holds. He shows exactly what Jacob holds. He holds similar to me, 17% Amazon. That's why I follow him, because I like his analysis on Amazon. He also has Melly, which is similar to Amazon, Google, Uber. So I hold a lot of these stocks that he holds too. So I'm following him on there, and he's a bunch of followers. And then specifically here, we have a notifications tab, which I'm going to go to on the top right here, which is going to notify you on any single stock you have in your watch list or inside of your portfolio. It's going to notify you when somebody posts. And lastly, we have a following here. Anybody you follow, this is a feed just for the people you follow. So if you follow 10 people, when they post, it's going to be on here. And for you, it's going to be the most popular posts that you can see that the algorithm is recommending. So people post their portfolios all the time. And people have thousands of followers on here and sometimes huge YouTube channels too. So that's a great way to do it. And if you want other ideas off Blossom, there's even a section that shows you the most popular out of everybody on Blossom, 1,000 people that use it, the most bought. So in the United States, the most bought ETF is SCHG, food. Then Meta, actually Nvidia was up there a couple days ago. So it's constantly being updating based on what people are buying in the community. So we have all these stocks, so you can see if a stock is starting to be popular, you can search it up. So, and then you have Canada, of course, you're Canadian. It's a lot different. Canadians are actually way better investing in ETFs, as you see, way less single stocks here. But then let's get into the next one we have here, which is Simply Wall Street. So, Simply Wall Street. I'm gonna bring this on my mobile app, but we're gonna have it here on the screen too. So the quick mobile app view right here, it's very nice and simple. We have the Discover tab, we have the Screener tab, the Community tab, and the Watch List. The Watch List, you can put any stock you want in here, and it'll give you updates, and it'll tell you the valuations and everything. You can even put your portfolio on here, so it can do all the valuations for you. But what we're going to do is we're going to go on the website, just because I like it a little bit better now. So like I said, there was a huge update that made all these paid features free for you. So you look at the stock, Amazon stock, boom, look it up. It's going to tell you the value. So what's the valuation? It's going to tell you how it's valued based on its growth ratio and compare it to other stocks in the industry. For example, like it's going to compare Walmart to, it's going to compare Amazon to Walmart, to Melly, and to Alibaba, and the PDB, because in the similar holding as it. It's going to compare it. Future growth, it's going to take the analysts, it's going to take all of the analysts' expectations and see how well this is going to grow. So we give it 3 out of 6 check mark. Past growth, has this company grown in the past? Because past growth was one of the best metrics to use for future growth. And health, basically, it's saying, does this company have a lot of debt to assets ratio, which Amazon is amazing at? And for future and valuation, this is pretty good for a Mag 7 stock. So we're going to go down here. I can tell you analyst expectations. It has news. Really simple to use website. You can scroll really quickly, and it's going to tell you the competitors here and year-to-date performance. We have all these different earnings and analyst changes with these with this right here. If you click on it, it's going to tell you each analyst change their recent news again, and we're going to go to Amazon's price volatility versus the industry. Industry, like I said, is similar stocks to Amazon in the same industry. There's tons of things. The PE ratio. The PE ratio is price to earnings ratio. More valuation. It's going to go over it. It's revenue. It's going to explain the revenue. It's going to explain the value, so we know it's 3 out of 4 checklist, but then it's going to go through the checklist. Low fair value, nice. Significantly before, low, significantly under fair value. So we saw at the top, it's 29% undervalued than it should be, according to his website. So let me go to P ratios, based against, it's going to be based against similar stocks, and you can see it's right in that middle of the current price versus fair value price, about right. So it's a little bit undervalued here. So you can see it's discounted. You go back to its P ratio. It's going to compare it to similar holdings. Like I said, Melly right here. We're going to go to Amazon, Alibaba, PAD, and JD. The thing is, these 3 stocks right here are international companies. So that's why Amazon's P ratio is so much higher. And then it's going to tell you the risks here as a higher P ratio. It's going to go over the historical P ratio. Let's go back down here. So at one point, Amazon had this 250 P ratio, and right now, based on its valuation, you can see all time that it's one of the lowest prices that it's ever been at, except for when it crashed. When it crashed down. Let's go based on versus competitors, price to earnings, fair value 40. So we're only in the first one. Look at all this. I'm going to go through analyst targets. Look, you have the analyst targets, the 1-year average, you have everything. And I don't even explain this because you guys can go in this yourself free. I just signed up. I just logged in. My real account is on my phone. So future growth expectations. And it's going to do the growth criteria. Then it's going to explain it to us. Then it's going to show you the past versus future growth, analyst, industries, markets, and it's going to go through the growth checklist and say earnings versus savings rate, earnings versus market. So it's beating the earnings in the market. But high growth rate, it's not growing at a forecast significantly. It's showing us all its metrics in an easy to understand way. All this future return equity. You don't have to understand any of this because it explains it to us really well and simple. Past performance. So it's going to show us the 6 checks, and then here it's going to show us how they get their revenue. So you can get everything you possibly want from everything you possibly want inside of this. So Amazon Web Services, it's telling us that they get 17.2% of the revenue from this, and this is their total cost from all their sites, and then this is their revenue. This is how much they're actually making and where they're putting it into each side of the company. Then we have free cash flow versus estimates, earnings growth. I'm just going to go on there's so much stuff here. I can't go through it all, but it's basically a healthy balance sheet. Like I said, I love quality companies. It has amazing health right now, so very low debt ratio. Of course, they don't have a dividend in buyback, but that's only because they don't care about the shareholders. They're focused on growing, which I don't care other shareholder if they don't care about us. They just want growth. It's fine. Management, it says everything about the owners, the chief executive. It's even going to give you ownership. This one doesn't actually have any information on who is going to buy and sell this, but we are going to go on something else like Salesforce that actually does. It's going to tell us insiders. So what are insiders? It's going to tell us people that work for the company if they're buying or selling it. We can see how people bought. We can see 6 to 6. We can see 6 to 9 months ago, tons of insiders sold off the stock, and since then it's gone down, and everybody's bought it back. This is one I do hold, but I do believe it's undervalued. But insiders are not thinking the same thing as me. So then let's go into the Discover tab. So if you have no idea, if you don't like anything that I said recently, you can go anything you want. If you think the next thing is quantum computing, if you want to do oil stocks, high growth stocks, if you want to do super small caps with high insider buys, or you do anything you want. There's screeners for everything. So what are screeners? It takes these metrics and it's going to screen for it. So anything you can possibly manage, gaming companies, it's going to be on here. Anything you're interested in, and there's even a mega screener where you can take anything you want. Say you're a dividend investor. I want value and I want health. I want to be a healthy company. I want to be undervalued and I want to give a good dividend for safety. Or no, I want to be extreme. I want extreme future growth. I want extreme future growth, and I might take a little bit less value just because it's going to be high in growing. So less value, less health, but it's proven that it grows and it's gonna grow in the future. We can get all these companies here. Of course, these metrics are kind of hard because a lot of the companies aren't going to be that high. Because like if you go extremely far, like value, future, and health, like that's like the marks. That's what we want in a company. There's no companies because nobody can even hit this mark because this is so hard to do. That's why this is amazing. And if you link your brokerage, it's going to give you a full breakdown of your own portfolio. Same thing with your watch list. It's going to give you the breakdown with your own things. You can see a bunch of these companies are underrated. It's going to give you suggestions, all stuff like that. And our last thing we're going to go over is Yahoo Finance. This is honestly the GOAT, the OG looking into single stocks. Here you have Amazon, you have everything on the side. Research, of course, locked because they're gatekeeping, unlike simply Wall Street. But my favorite part of this, just a little favorite part of here, besides the P ratio, is a 1-year price target. We can see here that what the price is compared to what analysts think it's going to be by the end of the fiscal year. So by the end of 2025, analysts on average think it's going to be 241, which I think is a perfectly good price. I bought it. I bought a bunch of shares at 215 last week, so it turned out to be good. The lowest analysts think, any analyst in the entire world thinks the lowest is 195. What was crazy about Amazon is that a couple months ago it was under 195. So I'm like, man, I love this company and it's way undervalued. That's why my 17% of my portfolio is in Amazon, and of course the high is 305. But usually people that put it that high are crazy bulls, and they probably hold a crazy amount of Amazon, and putting and overweighting their analyst decision in way over the top prices actually moves the average down. And then these are going to be the bears on the bear side trying to move their price target down. And you can see there's a lot of strong buys, a lot of strong holds. So this is what analysts think, and then we can go into the number of analysts and their change earnings history. We can see how the analysts change their ideas overperform. Like a lot of analysts think this is going to be a good stock. Of course, there's also historical data and statistics. You know me, I love statistical investing. So there's something for everybody in here. This is a little bit more complicated. This is actually, if you're like more of an advanced person, you can get used to this. But this is Simply Wall Street is a lot more straightforward for the beginner investor. So what's the process of what I did all in one? Let's go. Let's conclude. So we have Blossom. You're gonna go Blossom. You're gonna follow people stocks that you like, people stocks you don't like, and get their opinions on it. Of course, if you take all these opinions, you can use your own mindset to choose which ones you want. You find a stock that you like, you're gonna look it up on Wall Street. Of course, you can't just take any single stock. You can't just take their valuation into your only opinion. You can't be your only opinion, but you can. Of course, nobody really talks about this. This is a great platform. And then if you want, you can look at price targets on finance because that's awesome. And then if that's not your thing, you can screen for wherever you want. You can discover different types. If you're into like gaming stocks, like quantum computing stocks or aerospace stocks or renewable energy stocks, nuclear stocks. I hold some nuclear companies. Stuff like that, which is awesome. But if I was to give you one recommendation before I do go, it was to be, if you're going to look into these stocks and you're going to actually consider buying these stocks, it's going to be, you want to hold large cap companies. So these companies are going to be one of the largest and top of the industries, because when you're buying into these small cap companies, there's going to be a fundamentally larger risk. And also, like I said, a lot of people in Blossom do hold these ETFs. So Blossom is the best way to look at new ETFs, because everybody loves ETFs at Blossom. They absolutely guys them. So if you're looking to get into ETFs and you want to get some ideas, definitely go on Blossom on here. And I have tons of great videos, and there's tons of great other creators like Marco and a bunch of other people on here. So